Hi guys, welcome back to my YouTube channel. I hope you are safe, I hope you are doing well, I hope you are making money as usual. So in today's video, I'm going to show you guys a step-by-step strategy that you can apply on your charts and be able to make money literally every single day. I used the same exact strategy today on Euro USD and it helped me to make $3,000 on a trade. So what I'm going to do is I'm going to break down that exact trade I took today and I'm going to show you guys exactly how you can apply it and make money for yourself. So without further ado, let's get into the video. Alright, so guys, this is the trade I had today which ran for 5 hours. So what I'm going to do is I'm going to delete everything off chart and I will show you guys exactly how I analyze from the higher time frame until the lower time frame and how I was able to get the entry and how I was able to get my TP as well. So what I actually did is I had to go to the higher time frame, something like the H1, to know the overall if you are bullish or bearish, because the first thing you really want to know is the market structure. So on the H1 I can clearly see that we are bearish because price is creating lows, highs, lower low, lower high, lower low, lower high, and then from here I expect the price to create a new low. So on the higher time frame already I know that price will have to go down and then create a new low. So as I now know that on H1 we have to be bearish and we have to create a new low, all I have to do is I go to my lower time frame and I look for my internal market structure. So on the 5 minute I have my internal market structure here. I have to also get the structure. We have this pullback, this pullback, this pullback, this. So from here now you know that this is a high and this is a low, so you would expect price to give you a pullback and create a new low. So already from market structure you know that price will have to go down and create a new low, but you don't just use market structure. Market structure of course gives you the direction. So on this one you already know that we'll be looking for sales. So the next thing you want to be doing is you want to know your target. So let's say that if somehow you manage to get a sell, what are you going to target as TP? So for me, based on market structure, I already know that price will always break previous low. So all I have to do is I put a line at that low. That's gonna be my TP. But not only that, if you try to use liquidity, you can clearly see that price created relative equal lows, or let's say equal lows. So I know that price will have to sell and then take this low, not only because based on market structure to sell, but also based on liquidity we know that there are equal lows and then price has to sell to take out the equal lows so that it continue going bearish, right? So I now have my market structure. We are bearish, I'm looking for sales, and then second thing I have my target, which are those equal lows, and then third one I have now to look for, like, refine my entry. Okay, like if I want to be selling I have to look for my entry. So for the entry now all I have to do is I'm looking for unmitigated POI. Okay, so when I come, let's see, to the 1 minute chart here, this is New York session. I only trade London and New York, so anything outside of London and New York I don't trade. So on the 1 minute chart I can see that from, let's see, supply zones, I can see that this guy is already mitigated. We have also this guy already mitigated, but the only unmitigated zone is, let's see, this high here. So you have this thing. I think if you go to the second time frame, it's gonna give you another block. So price did not mitigate this guy yet. So as you can see, the price bought, came, he hit this zone. I'm looking for a sell setup. I think he actually gave a sell. If you go to, let's see, the 15 second, you can clearly see that price gave us a change of character here and then pull back, mitigated this other block and then give a sell. You would have actually had a sell here, but for me I missed that entry, so I'm looking for another entry. So for me here, if I want to be selling, there are two things I'm gonna be doing. Okay, I can see that even the high here, price created equal high. So if I want to be selling, there are two things I can do. I either wait for price to break the high and then sell down, that would be like a liquidity grab, and then I sell to the downside. Or if that didn't happen, I wait for price to sell and then create new structure, and based on those new structure I can now look to sell to the downside. So these are two things I do. But if I know that my POI is liquidity, I don't like taking entries from liquidity zone. So in this case I just have to wait. I have two cases, remember. If price does this, then I'm gonna sell, or if price does this, then I'm gonna sell. So these are the two things I'm looking for. So all I had to do is I had to wait for price. In this case price end up selling to the downside. So as you can see, that price sold down here. That was a bit quick, yeah. So as price sold here, I'm looking for entry, right? So let's say if I zoom in, we can clearly see that price left behind let's say another block here. Do you see this other block here? But the fact that me, I would never use this order block, because if you see this order block, of course the order block also took liquidity, but is literally right from that equal highs. You can see that we had equal highs here, so I don't want to be looking to sell from this order block here. So the best thing I can do is I have to look for zones below. So in this case, I had to wait for price to give me a pullback to this breakout block. So breakout blocks are just like demand that becomes supply, or supply that becomes demand. So in this case, let's see that we have something like this. So if this happened, we know that this was a previous supply zone that price failed. Okay, instead of, let's say, tapping and then give us a sell, it broke through. So if it broke through, that supply zone cannot become a demand zone, so price cannot pull back and then mitigate and give us a buy setup to the upside. So the same case when we are bearish, let's say price breaks through, so it breaks through, it can pull back and mitigate this demand zone, and then now becomes a supply zone. So this is what price did, but most of the time I want to see some sort of internal liquidity level by price. So when I go to the 5th and let's say 2nd time frame and I extend this thing, you can see that we have some wick here that price took. Okay, yeah, so price took this guy and start giving us a sell. So from here again, for me, I would love to see some sort of confirmation entry. So you can see that we have this swing low that price broke with this and then gave us a small pullback and gave a sell. Some people, they may actually look to sell from this guy, which is fine, but for me, let's say if I just want to sell from this small pullback from this guy, and then if I have my stop loss here, this is about 2.5 pips stop loss. Okay, I'm okay having 2.5 pips stop loss, so I don't complain having 2.5 pips. But let's say if you want to wait for a pullback here, yeah, you know that you're going to have about 1 pip, but price never pull back there. So I prefer having my setup than just waiting for some 0.5 pip pullback and then end up missing my setup. And of course, all I'm looking for is some 5 hour, and price definitely end up hitting for my 5 hour. So when I, let's say, go back to my 1 minute charts, and all I have to do is I just have to hold my trade until price hit my full TP of 5 hour. So in this case, all I had to do is I had to hold my trade until price hit my full TP, and that's exactly what price did. He played around a bit and then eventually ended up hitting TP. So this was my TP around 5 hour. So I closed full position at this low, and you can see that after price hitting this low, we started buying, because as I said, this is liquidity price hunting for. So based on liquidity, price has to take it, and based on market structure, price has to take it too. So for a quick recap, it's pretty simple. You have to understand market structure. So in this case, we know that market structure is bearish. Okay, so price is giving us bearish market structure, and as price pull back, we just want to look for zones that price came to mitigate, and then as we got the mitigation, we have to just look for entry. In this case, we got the entry from the breaker block, and then when you sell, you just have to target some opposite side liquidity. So in this case, we have those equal lows, so we just have to like target equal lows. So this is something that happens basically every single session, every single day. So you just have to come, you look for a market structure. So once you get the market structure, you get your, let's say, mitigation zone. Okay, like zones that price can mitigate, and then you target your liquidity, and that's pretty much it. And as you can see, this was 5 hour, but when I extended, price actually ended up running for some almost 10 hour, I guess. Yeah, you ran for 10 hour, but I did not hold for 10 hour because my target based on my analysis was just 5 hour. So I think that was pretty much it for this session. So if you like this sort of content, make sure you subscribe to my YouTube channel, and make sure you follow me on Instagram for any new update. Thank you.